Good morning. I'm Lon Shaver, Vice President with Silvercorp Metals. Thank you for joining me today for a quick intro on Silvercorp, a Vancouver-based silver producer with multiple mines in China. Just wait here for the presentation to come up. We are one of the lowest cost silver producers among our peers, and we think we have a unique story. We're listed on both the Toronto Stock Exchange and the NYC American under the symbol SVM. Please note that this presentation contains forward-looking statements and actual results may differ based on a variety of factors as laid out in our AIF. So Silvercorp is a successful Canadian mining growth story with two silver-producing mining districts in China, the Ying Mining District in Henan Province and the GC Mine in Guangdong Province. We've produced almost 60 million ounces of silver and 880 million pounds of lead zinc combined since the mine began production in April 2006. That's the Ying Mine. And even after all this production to date, we still have a plus 15-year mine life. It's also important to note that the Ying mines have distributed profits of approximately $420 million US to shareholders, of which our share is around $325 million. This slide shows our growth in silver production from modest beginnings in 2006. And you can see that we are on track to meet our production guidance of about 6.2 million ounces of silver for this fiscal year of 2019 when we have a March year end. Similarly, our lead and zinc production has shown growth since the beginning of production, and it has also been a meaningful contributor to our success. And we are on track for about 84 million pounds of lead and zinc combined for this fiscal year. So from the Ying Mining District, ore tonnages, which are the bars, and the silver head grades, which are the lines, have been a key reason for our strong performance. We've steadily improved our process grades since 2014, and that's the red line at the top. From around 200 grams per ton silver to in excess of 300 grams per ton silver. And this has given our consultants the confidence to increase the mining reserve grades in their technical report, which you can see in the blue line. One of the key reasons for this has been the greater focus on dilution control, resulting in part from some in-house tools that were implemented in late 2015, which you can see. With recent pricing, base metals currently comprise about 50% of our revenues. And on this chart, you can see that the purple line on the right axis is the silver price, which has been flat to down over the past few years. However, over the same period, the blue line, which is our value per ton of ore that we've mined, has trended upwards. And this is in part due to the dilution control measures we put in place, as well as the strong performance in terms of the metals pricing in lead and zinc. The red line, which is our costs, our all-in sustaining costs, and this is a factor that we can control, has been flat to down since Q1 of 2015, and most recently was about 110. So with a value per ton of around 180 and a cost per ton of about 110, we're currently running at a cash margin on an all-in sustaining basis of around $70 US per ton, and that gives us a cushion in cash flow to weather further weakness in the silver price. So the performance you saw on the previous slide has allowed us to create the strong financial picture you can see on this slide with cash of approximately 125 million US, and we currently pay an annual dividend of 2.5 cents. And in aggregate, the 150 plus million that we've returned to shareholders through dividends and buybacks compares very favorably to the about 199 million, which is the total equity that's been raised in the markets. So we don't just focus on growing production and revenues. We're also very keenly focused on our bottom line profitability. The chart on the left shows our consistent profitability and profit growth over the last few years. And you can see that apart from one quarter, we've always been profitable. And over the last 16 quarters, our free cash flow has been consistently positive, with the exception of the first quarter, which is seasonally impacted by the Chinese New Year. And you can see that in the last quarter, and in fact, the last 2 quarters, our free cash flow has been around 14 million US. We recognize the importance of defending shareholder value and rewarding our shareholders. And so we have conducted share buybacks, and we're probably the only company in our peer group that has had a total share count drop over the last 4 years. The chart on the left shows our all-in sustaining cost, net of our base metals byproducts, and that was $254 US per ounce of silver in the last quarter, making us the lowest cost producer amongst our peer group. And this low cash cost obviously gives us a solid foundation to generate cash flow from operations, even in soft markets. Looking at the chart on the right, from a return on equity standpoint, you can see a trend where we break away from the pack since the beginning of 2016. And we've outperformed since, and our current return on equity ranges between 10 and 15%. So growth is a word often heard in the mining industry. You can see from the chart on the left, as compared to our peers, we're one of the few companies that hasn't grown our share count. And at the same time, from the right-hand side, we've been one of the few that's been able to grow our free cash flow per share over that same time period. Speaking of growth, here's another measure of our growth over since the beginning of production, and that is in silver reserves and resources. And even after the 12 years of production, we still have 108 million ounces of silver in terms of reserves, which brings us to about a 15-year life of mine. Similarly, our lead and zinc reserves and resources have grown over the same time period. So our plan for the future is simple, and that is really to maintain current operations and production levels, to further optimize our operations to manage costs, and keep growing our long-lived assets through ongoing exploration, which we do every year. We're also evaluating bringing back in a mine that's currently on care and maintenance that could be a contributor to our gold production. And we've built, with our capital, we've built a 30% stake in an affiliated company, New Pacific Metals, which has the Silver Sands project in Bolivia, and in which Pan American is also a significant shareholder and is involved at a board level. And finally, we're going to target additional investments and acquisitions of assets that predominantly high-grade targets that we feel that we can bring into production on a timely basis and with a reasonable capex. So this slide gives a snapshot from the capital market standpoint. We currently have 3 analysts covering the company, and one has us on a review basis. We're in discussions with a few other analysts, and we're optimistic that we can bring some more coverage onto our roster. From a share ownership standpoint, we're roughly split 1/3 between insiders and institutions and 2/3 retail. So there's probably some room to grow on the institutional side. And the chart on the left shows our top institutional shareholders. So that's a quick introduction to Silvercorp. We'd be pleased to follow up and answer any further questions. Please do contact us if you have any other inquiries. Thank you.